Hello trader, and welcome back to another Forex tutorial. Today we'll talk about RSIs, one of the most popular indicators for the trading platform MetaTrader 4. And this tutorial is for advanced level. Before we go into detail, just want to say hi to those who are new here. My name is Liam. I'm from Green channel. And when you visit Green on the YouTube channel, you can find the Forex trading tutorial, tips and tricks, as well as weekly forecast, and sometimes I do live trading as well. So the publishing schedule will be every Sunday 9 GMT plus 7. I'll be publishing a new video about analysis and forecast for the new coming week. And there are certain days in the week I'll be publishing the new video about tutorial, about tips and tricks, and my live trading as well. Currently, I cannot set it out to have a fixed schedule for the weekdays video. So to avoid missing out any tutorial or trading system, so you may consider to subscribe to my channel and hit the bell button. By doing that, every time I publish a new video, there'll be a direct notification sent to your phone and you will not missing out any of that. There's one more thing. There's one comment from my Vietnamese fellow. He suggests me to move to different broker, and there's one feature about this broker is if you're a good trader and you have a good performance, there is a possibility that the broker itself will do some kind of funding for trader. And also within that broker, you can offer a signal or social trading where you can sell your signal and earn a commission. First of all, I really appreciate and thank you for the suggestion. But for me, start trading Forex is not necessary to start with a big amount of balance to have a proper monthly profit. And this is a message to you as well, especially a new trader. You don't have to start with a huge account balance. You can just start as small as $100. And if your performance is good, your system is profitable, then day after day, if you don't withdraw the profit, then your account balance will grow by time as well as your trading skill. And yeah, there's no rush in trading Forex. Anyway, that's just my opinion, and there's nothing wrong if you have money and want to start with a big account. And now let's come back to the main topic of today. Tutorial for RSIs in advanced level. Let's go. Alright, so on the price chart right now, I already got the RSI ready, but in case you're a new trader and you don't know how to pull out the indicator, then here you go to Insert Indicators, Custom. Here you can find the RSIs. Just click and click OK, and then you will get the notification like me right now. We'll talk a little bit about setting for RSI later, but for now we just use the default setting. So yeah, if you're new, the function of the RSI is to provide to the trader a signal when the price going to oversold or overbought. What is oversold or overbought? On the RSI, you see here there are two levels with the numbers 30 and 70. So every time the price reach or cross over either one of these levels, below 30 we consider as the oversold, and above 70 we consider as overbought. Therefore, trader will open sell or buy order regarding to the signal that the RSI provide. But there's one thing really important that I want to straight out, especially to the new trader that just know about using the indicator, RSI in specific and all other indicator in general. You cannot just use one single indicator to make the decision to open any trade. At least you should have multiple filters in your trading system before you open any buy or sell order. Mostly all the indicators have a general character which is lagging and delay, so you may get a late signal. Never rely on one single indicator to open any trade. Alright, now come back to RSI. So the function to provide the trader when the price is considered to go into oversold or overbought. But you should never use the RSI, especially in lower time frame, because usually very often that the RSI will give you the oversold and overbought signal, the fake signal I mean. And in consolidation area, the RSI will give you no direction at all of the where price will go. So let's take a look into the price chart and I will give you an example, right? So on the chart right now we have the Euro USD on 5-minute time frame. Here is one of very good example that I want to show you. So we'll get the horizontal line to mark. Alright, so here we go. So for example, the new trader that rely on the RSI alone to make the decision. So in here, he might think that the price is deeply in the oversold condition. So he talked to himself, right, here's the chance of my life. I'm gonna buy, I'm gonna hit the market, and I hit really hard this time. This is a good chance, like once in a lifetime. So I enter the trade here. The RSI show me that the price is going up. So I'm gonna enter the buy order in here with all I have. Here we go. But you know what? A few minutes later, bam! Look at that. What happened here? And the new trader starts freaking out. First, because he entered the trade with a big volume. Second, trading in a 5-minute time frame, there's a lot of fake signal. And the movement of the candle is like crazy, especially for new trader. It's a really huge challenge in the psychological aspect. So yeah, start talking to himself, right? Life happen, and not all the time follows with one. It's okay. I still can better draw down. So, and then you know what? He see the price in the ranging condition. You start getting confident again. Alright, the price right now reacting to this level, and I'm so sure that the price will go up after this, and I'll be rewarded for my risk. Alright, but then another several bearish candle, and this time the new trader really freak out, and so he decided to take the bullet and close the trade. I lost all the money and start feeding himself some negative thinking, like the market is always against trader, and this is so wrong when he decide to start trading Forex, kind of thing like that. Or he may blame the broker to do some trick against himself, something like that. So you can see on 5-minute time frame, small time frame, there will be a lot of fake signal. And you cannot just rely on RSI to make the decision on trading. Here is a very specific example. And that's a quick introduction to those who are new to RSI, and some important message from me before start using RSI for trading. So now let's move on to the first part, how to use RSI in the trading. So as some of you already know that RSI is to keep the oversold overbought signal. And regarding to that info, combined with some other filter in your trading system, you may give the decision to open a buy or sell order. But there's one thing to keep in mind. I know that I repeat again, but do not just rely on oversold overbought that make you open any order, because no one can tell that when the price will reverse. So in some case, the price will stay in the oversold overbought condition regarding to RSI for very long periods, from few days to few weeks and few months. So please take a look on the screen right now. Here's one example of the price that stay under the oversold condition for a pretty long period of time. So if you look at the RSI here, we have the oversold signal. So if you just rely on RSIs and open the buy order around this area, at this level for example, now you see what happened next. Your account will suffer drawdown for several days, not to mention if the price hit your stop loss and your account balance suffer the damage. So in this example, even though you get the signal from the RSI, the price in the oversold condition, but until like 2 days before you can see the price reversal. So this is considered just one of the example, like just 2 days. But some other case you might see that the price stay in the oversold or overbought condition for several days until weeks or even months. So be careful, and always keep in mind that do not just rely on the oversold overbought of the RSI. Do not trust the 30 and 70 levels of the RSI. And there's one trick to keep you out of trouble for the case like this. You might take into consideration important support and resistance level. So before, let's say in this case, so before I decide to go long, because the RSI give me the oversold condition, oversold signal, but then I will zoom out and see if the price right now is close to any important resistance. If so, I'll cancel to take the deal, because why? Very high chance that the price will react to resistance level. My buy order will stay negative for How many days, I have no idea, but basically the support resistance level, when you take into consideration as one of the criteria to open the trade, then it will be a life saving for you. So remember, this is just one of the examples that will keep you out of trouble. Now let's move on to the second part. Another function of the RSI, as you might know, is for trader to spot divergence. And what is divergence, in case you don't know? Divergence is in the trading condition, price create a lower low, but in RSI we see different thing, higher high. So that's what people call divergence. And what divergence for is it gives the trader the signal that there will be price reversal. So divergence is very powerful when it comes to trading, because it gives trader the signal to buy in bottom and sell in the top. But again, you cannot just use any single indicator alone to help you make the decision to open the trade for divergence. And in this case, we're talking about RSI. So on the screen right now is one example. Let me show you. For example, in this case, you see the trend is, there's a downtrend, and from here to here we see a lower low, while RSI gives us a signal of divergence where in fact we have a higher high in here. Right, so if you rely on RSI to trade the divergence, then for example, you order the trade around here, and look at what happened. Your balance will remain draw down for several days, 2 until 3 days, before we really have a price reversal and start a new trend on opposite direction. So how to avoid the fake signal from just rely only on the RSI to trade the divergence? There's one pretty effective method to help you get out of trouble from the case like this. That is, you combine the divergence signal from RSI giving to you with the trend line, which is very simple. So yes, we have the divergence signal from RSI, but at the same time, the second criteria is we also wait for the price to break the trend line as well, which is around here. So if you open the buy order in here, then look at that, you will not suffer any drawdown, and in fact the trading system immediately work and you have profit right after you open the trade based on this method. So this is one of the ways that to improve and to filter out some of the fake divergence signal from RSI that you can apply to your trading system. So besides using the RSI to spot the divergence and using oversold overbought, there's one more function from the RSI, also powerful, that not many traders know about that. That is the level 50. Besides 30 and 70, we will manually add one more level, which is 50. And that will be very powerful, especially for trending condition. But in consolidation or sideways, this 50 level will become really bad. So avoid to trade the 50 level in a sideways condition. Only use this in a trending condition. Right, so for those who doesn't know how to add the 50 level into RSI, you right click on the price chart, go to indicator list, you go setting of the RSIs, click edit. Click add. Now just type 50 and close. Okay, close. And here we go. We have another level in between the 70 and 30, which is 50. Now there's one more thing to increase the efficiency of the 50 level. That is, you add the moving average level into the RSI window. And in case you don't know how to open two indicators in the same window, and here's a way to do it. From navigator window, you open the trend menu, go to moving average. You left click, hold and drag it into the RSI window. For the setting in here, suggest to you a period of 100 or 200 for the best result. For my method, we use exponential. For apply to, you choose to the first indicator in this case, which is RSI. For the case that you already have multiple indicators on the price chart, I suggest you to remove all the other indicators if you want to use this system. So just the only one that you have on the price chart should be RSI only. So apply to first indicator data, moving to visualization tab. You untick the show in the data window. Click OK. And here we have the moving average and RSI on the same window. So like I said before, the level 50, you should only use them in a trading condition that give the best result. Do not use them in the consolidation or sideways condition of the market. So there are three criteria to use 50 level. First of all, you need to confirm that the market is in the trading condition. And second, you check the MA level in the RSI window. So we only buy when RSI is above the MA level, and we only sell when RSI is under the moving average level. And third, you need to wait for RSI to come back to the 50 level before you open the trade. So I'll give you an example on the price chart now. So within this period, you can see that we have a downtrend here, right? So first criteria, the market is trending, check. The second criteria is RSI under the moving average, yes, check. The final criteria is we wait for the RSI to come closer to the moving average, to the 50 level, and we'll place a sell order in this case because we have a downtrend here. So if I that at this moment, the RSI is pretty close to the 50 level. And it meets all three criteria, so there'll be perfect entry for sell setup. And as you can see, not too long after that, we can see a profit from the trade already. So that is one of the examples of using your RSI 50 level to combine with the moving average in the same window to increase the efficiency of the 50 level. Now, besides the three main powerful feature of the RSI that I just introduced to you, there's some small aspect as well that you can take benefit of using your RSI. For example, you can draw a trend line on RSI. So in the case we have an uptrend, draw a trend line here. Because you know the data from the RSI is by using the algorithm to calculate all the data from the market. So the way that RSI look at the price chart, it gives you another aspect about the market, and in some cases it may help you as well to get a better and more accurate entry point and to avoid some bad signal from the candle price chart. So that is one of the complement way to use the RSI as well. And again, I suggest you to not using this under the 1 hour time frame. Now come to the part where we talk about setting for the RSI. So the most common setting for RSI period among all the traders are 5, 7, 10, 14 and 50. And depends on your trading system that you may find one number is better than the others. And also on different time frame, each number will work in different ways. So yeah, you may want to play around and find the one that's the best for you to match your trading system and the time frame that you trade. But there's one suggestion I want to say is do not use the value smaller than 10 because again it will give a lot of low quality signal. Even though RSI is one of the most indicator among traders, but there's no exception. As the indicator, there will be a pros and cons. And let's sum up the pros and cons of the RSI. So for pros, the RSI, as I introduced earlier, it is really good in trading condition to help you to spot the oversold, overbought, divergence, and especially when combined with the moving average level. For cons, the RSI is the indicator that has a pretty bad lagging, so always combine with the other factors, the other filters that you trust in your system before you decide to make any decision in trading. And that is the end of this tutorial. If you find this useful, practical, profitable, consider to like, subscribe and share the video. Feel free to leave a comment if there's something that you want me to explain further. Thank you for watching and I'll see you in the next video. Happy trading and stay green.